morning, everyone, and thank you so much for spending the first part of your day at Master Investor with us. I will start by talking about why Vietnam deserves a place, not just in your travel portfolio, but also in your investment portfolio. And then I will hand over to Thao to talk about how you can access this rapidly growing market through VALE. So just to put things in perspective, Vietnam is actually a very large and populous country. In terms of land area and population, it's about 40% larger than the United Kingdom. Our largest city, Ho Chi Minh City, has 10 million people, almost as big as London. But the average age is much younger. It's at 32 years old compared to 40 in the UK. Urbanization is very much behind. Only 42% of people live in urbanized area compared to 85% in the UK. So, but urbanization is happening very fast in Vietnam, growing at over 2% per annum, and that's one of the fastest rates of urbanization in the world. And that means that there are a lot of opportunities in banking, real estate, and retailing, which are the major sectors that VALE is invested in. The economy of Vietnam, the size of it is only 1/10 of that of the UK, but it's growing very fast. Over the last decade, we achieved 6% per annum. And last year, GDP growth really accelerated to 7.1%. And this year, in Vietnam, we are targeting 8% GDP growth. So what has been the major drivers driving this economic miracle? First up is because Vietnam has been capturing the China Plus One opportunity. China Plus One is a process where multinationals realize that they have been too reliant on China for their supply chain and then started to look for other alternative places to manufacture their goods. And that started around 2013, but really accelerated under President Trump's first term. And Vietnam emerged as a very attractive destination for companies getting away from China because it's right, share a border with China. And so the location is very strategic. And it also enjoys cost advantage with manufacturing wages only 30 to 50% that of China. And also Vietnam has a large number of FTAs, free trade agreements, with countries around the world. So Vietnam has become a manufacturing powerhouse. And if you think about things that you use, a lot of it might come from Vietnam. Like my work wardrobe comes from this American brand called Theory. And they used to be made in China, but for the last few years I noticed that it's a made in Vietnam in the label. And my AirPod is designed in California, but made in Vietnam. Anyway, some major companies are set up in Vietnam. Samsung produce 60% of their handset in Vietnam and export to the rest of the world. Apple, we have 30 Apple suppliers operating out of the country. So all of that means that FDI is making record high year after year. And last year it reached $26 billion US. And high FDI doesn't just mean jobs in factories and management now, but it also means very long-term benefits to the country in terms of especially technology transfer and knowledge transfer, because Vietnamese people go work for these FDI companies and then learn the ropes and set up businesses and growing our economy. The second big driver of Vietnam's economic growth has been the middle-class boom. So this population of over 100 million people is not just a workforce, but also a force for consumption. And over time, they have become richer, shown by the green parts of the population are the ones in the consumer class, and it's getting bigger. And by 2030, over 57 million people will be in the consumer class, and this part is even richer. So as this population gets richer, their spending habit also changes, getting away from traditional trade to modern trade and e-commerce. So, moving away from shopping in wet market every day to air-conditioned convenience stores. And that presents a lot of opportunities for companies that serve this shifting consumer behavior. Finally, the third big driver of the Vietnam's economy has been infrastructure spending. There's a new airport being built. There's expressway connecting the north and the south of the country, and the latest very exciting project that have been approved by the National Assembly is a high-speed rail that is going to be completed by 2035. The total value of that is almost 70 billion US dollar, and that would add 1% to GDP. Total spending on infrastructure this year is expected to reach 30 billion US dollar, double what it was in 2019. And all that, and the government's debt is still only 40% of GDP. Whereas I think in this country, we are over 100% of GDP now in national debt. So still room for more fiscal stimulus. Now, all of that is so great, but what is the risk? The question that everybody is asking in Vietnam right now is, what is the risk of Trump tariff? Can Vietnam be a victim of its own success? Because we run the third largest trade surplus with the US. Now, President Trump has announced a lot of measures against China and Mexico. Well, China wants to rival them as a superpower. Mexico is accused of sending illegal immigrants and drugs across border, but they haven't said anything about Vietnam. Vietnam, the top categories of exports to the US are computers, machine, textile. Those are the products that the Americans probably don't really want to onshore. Or even if they wanted to, it's unrealistic because manufacturing wage in Vietnam is still only 1/10 of that in the US. And the Vietnamese have been looking to buy more LNG and agricultural products and airplanes from the US to try to balance out this trade surplus. The Vietnamese have been very enterprising in trying to strike deals with the US. Even the Trump organization is betting on Vietnam. They have signed a $1.5 billion deal with a local developer to build resorts and golf courses in the north of Vietnam, and that is expected to break ground in May of this year. I would leave you with an update that the government in Vietnam now is carrying out very sweeping reforms, and we've declared an era of ascendance. And the government, since the beginning of this year, has been carrying out merging ministries, merging provinces with the aim to cut 20% of government headcount and increase efficiency in all areas of governing, pushing ahead legal reforms, and with the aim of empowering the private sector so that we can target 8% growth this year and double-digit thereafter. So I hand over to Thao now to talk about VALE portfolio.
And gentlemen, my name is Thao. I'm the co-portfolio manager of VALE. So today I would like to present to you the VALE portfolio and also the Vietnam equity outlook in 2025. So VALE is one of the largest and also longest fund in Vietnam. We currently now manage around 1.8 billion US dollar or 1.4 billion in sterling. The objective of VALE is to provide a medium and long-term capital growth from Vietnam equity market. We invest in the company that we think will generate high growth with good value metrics, good corporate governance, and also the VALE portfolio is quite balanced and diversified between the large cap and mid cap name to capture on potential opportunity of the Vietnam macro growth driver. With the size and also the close-end structure of the fund, it allows Vail to participate in the structured deal in Vietnam. For example, pre-IPO, IPO investment opportunity. In the last 12 months, our board of directors has been very active in governance side to enhancing shareholder value. We appoint new chairwoman last year, Thao Ngo, who's a well-known fund manager in the UK. We have new executive director who is expert on Asia. And also last year, we're cutting the fee to the flat 1.5%. And recently, the fund also announced a 5-year performance-related 100% conditional tender offers. In the last 3 years, the board of directors also has been very active in managing the fund discount. In the last 3 years, the board has purchased more than 14% of the total share outstanding and recently announced the conditional tender offers. Talking about the Vail portfolio, so we reflect on the key 4 themes of the Vietnam macro growth driver on the portfolio. Firstly, the domestic consumption. We invest into key sector banking and retail. For the theme that Vietnam benefit from the supply chain shift out of China, we invest in technology and industrial park. The third one is the high urbanization rate in Vietnam will benefit for property sectors. And the last one, and the most important one, is infrastructure, which is the key growth driver of the new cycle. Look into more detailed breakdown of the portfolio. The biggest sector in our portfolio is banking sector, 42% of the portfolio, because we believe that the banking sector will benefit the most from the recovery of macro in the new cycle. The banking sector this year is projected with the earning growth around 17%. Banking is still the key capital provider for the whole economy. The return on equity of banking sector remains healthy at above 20%. And the credit growth this year is forecasted at 16 to 20% given the high GDP growth number of 8%. Valuation, banking still trade at a cheap valuation at 1.2 times right to book. The second biggest sector is retail. As Thuy Anh mentioned above, Vietnam has seen a rising middle class in Vietnam. The rising income benefit for the retail sectors, and the shifting from the traditional trade to modern trade creates opportunity for some local company become a new champion in this sector. And also, one of our top holding is the biggest retail in Vietnam. The residential, the property player also will benefit from the strong urbanization theme in the country. Recently, we do see a ramping up in the number of transactions in the property sector, and the price also has been increased by almost 15 to 20% in the last few quarters. The other sector like the technology, Vietnam also see the similar trend like in other countries. The AI-related project development also creates a breakthrough IT transformation in the country. Last year, we signed the agreement with NVIDIA to build a US company to build a new data center in the country, and also the AI project related. Other sectors like material construction or the industrial park energies is for the infrastructure development theme. This is the portfolio matrix where we show our top 10 holding and also the fund valuation. So the top 10 holding occupy almost 57% of the portfolio, which show our willingness to take a big position in some conviction name that we think will generate high earning growth, and we will have a long-term investment with them. The earning growth of the portfolio is projected at around 19% for this year, and the valuation is 11 times in terms of the PER. Talking about our performance in terms of the year-to-date, in the first 3 months, we outperformed all the peers who also listed in the London Stock Exchange. In terms of the 1 year, we both ahead of the market with the Vietnam Index and also other peers. Looking more like in a longer term investment horizon, you can see that in 5-year and 10-year, how much will outperform the Vietnam equity market. So as I mentioned above, VAL has the advantage to participate in the structured deal in Vietnam thanks to our strong track record in the country and also the size of the fund. So for example, last year, we participated in 3 structured deals at the 20% discount compared to the market price, which bring good alpha for the fund performance. So looking into the longer term, if the market turns into a favorable condition, we expect another IPO wave where the private company and also state-owned company in Vietnam go for a privatization. We estimate the pipeline will value around $48 billion. So it will bring more investment opportunity in more diversified sector into the equity market. So what is the view for 2025? Vietnam so far has been outperformed all the Asian market in terms of year-to-date performance. And also, it thanks to the strong earning growth recovery last year. In 2024, the earning growth of Vietnam equity market is 21%. And the momentum will be continued this year, given the ambitious target of the government to push up the economic growth. GDP growth will be 8%. We have here the 3 scenario project for the earning growth in 2025, where we already reflect the potential impact from the Trump tariff into the economy. So the base case, which is based on the assumption maybe potential tariff in some selective item, the earning growth will be from 15 to 17%. If you be more tariff, they still grow 5 to 8%. Or if the tariff is less aggressive, you can see much higher earning growth, 18 to 25%. In terms of the valuation, the Vietnam equity market is still trading at quite a reasonable valuation at a price to earning of 11 times and price to book at 1.3 times. There is a potential catalyst for Vietnam to be upgraded into the FTSE secondary emerging market in the next 6 to 9 months. Vietnam equity market is still in the frontier right now. There will also a new trading system introduced at the 5th of May this year, which is more friendly user for investor and also create a central clearing counterparty system, which allow the T0 trading will be introduced in the coming time. So in summary, we think that Vietnam has entering into a new era of growth and political transformation, as I mentioned above. Despite there will be a headwinds from a potential Trump trade policy, however, we think in the long term, Vietnam still offer a chance to invest in a growth story at attractive valuation. So this is the end of my presentation. So if you have any further question, we have the booth at M7, just opposite to JP Morgan booth. Thank you very much.